Hey everybody, welcome to this morning's webinar. It's 8 o'clock Pacific time, so we're just sitting back here watching the market slop around here. As you know, well, you can see from the chart here, the daily chart of the NASDAQ, you have, and I'm going to blow this up here. Everybody can hear me okay, right?
Yeah, you're coming in fine.
Yeah, you have two high volume reversals in the pattern, and that's one thing that bothers us here. So a lot of times when you see, and if you look at this actually on an IBD, this volume bar I think is not really showing. It's not, shall I say, logarithmic. So in IBD you can see it's a huge spike in volume yesterday, and you're reversing, but you're holding in right now today. So from our perspective, we're just hanging loose and letting things play out. We're not. We moved to cash mainly because we were heavily weighted in the AGQ and the DGP, and that entails a great deal of risk if things start to break down. So on the first sign of something essentially showing a sort of a broken pattern, like say SLV does now, okay, we're not going to hang around and let this thing go lower. I remember the guy who emailed us back in somewhere in here and said that he bought, AGQ or somewhere up in here when it was streaking up. Not sure why, because there's not a single pocket pivot, and he still had it down here, and he'd lost half his IRA. So we don't want to mess around ourselves. So it gets below the 200-day moving edge. Now, if we want to buy it back, we're waiting for the next buy signal. In my view, reversals like this here, here's a high volume reversal on one day. Here's another higher volume. And the volume picks up and it reverses here. You see that occurring, and that's normal after a sharp run. Up here you have this, and this is not normal. So from our perspective, seeing as how we bought silver here, and then added here, so we bought 3 times and got in pretty good, we decided to lock in a profit on the overall position and sit back and wait. And sometimes we like to do that. We don't like to sit necessarily with a bunch of stocks, especially if we're seeing some potential issues out there with the market. So I'm going to look at something here. Let's see. The one thing that bothers me in this market right now is that you're seeing breadth actually starting to move sideways. It's been doing that for the last 2-3 weeks as the market has moved higher, and you can kind of see that anecdotally because you see stocks like Priceline, you see Apple moving, and those are making new highs. But really, breadth is narrowing here. And I'm going to pull up a chart here. I should have done it earlier, but didn't quite get around to it because we've got several things going on this morning. Hang on one second here. And I want to show you, this is what bothers me about this market, is that I don't necessarily need to see breadth confirming. So in other words, here you see breadth confirming the breakout in the NASDAQ to new highs. That's good. But the NASDAQ continues higher, and suddenly you see breadth really start to break down. And it's actually making lower lows as the NASDAQ is making higher highs. So the one thing you know is you're getting into a higher risk area, and with the breakdown in the metals yesterday, it could become problematic. So for us, it's really not that big of a deal to back away, especially in the action in silver. And we can wait to come back on pocket pivots or other buy signals. But mostly pocket pivots will give you your re-entry points if necessary. So we don't have any problems bagging the profits in the precious metals and backing away and waiting here. They may come into play again, and we'll see how that works out. But for now, that's pretty much our position on them. And you can see the SLV is back below the 200-day, so you had one chance to sell it. It's holding on top of this. It could skitter around, maybe go sideways, and then try to push out again. But our position is we can afford to sit back and wait. So we're not going to stick our necks out here and wait to get hammered. So if that's going to happen.
Yeah, it's
We
going to
have
probably
not.
take a few days to correct this kind of defect, if it's going to correct
Right.
it. And we'll see it in the form of constructive price volume action in the days ahead.
Yeah, exactly. So there's no reason for us to have to worry about it or be concerned. And the one thing that I would have liked to see, so on this gap up, you see some pretty good volume on the upside. And it gaps up. It should have held, in my view, it should have held the top, or at least the low part of this gap up on top of this little mini flag or whatever you want to call it. And so from my perspective, that I don't want to see that. That's not right. I'm gone. In fact, yesterday, any silver I had myself, not in the accounts that Dr. K and I run together, but myself, once I saw this start to break here, that's it. I'm gone, and I'm not going to mess around. And Portfolio Simulator dude also blew out of his silver and gold positions, and that's just what he did. So, he doesn't like what he sees. He also had racks, which I guess he could buy back today if he wanted to, but it's kind of coming underneath this gap up low, so it's really not holding it, so don't like to see that. MA, he bought it extended from the 10-day here, got a nice pop. He backed away. He could buy it back here at a lower price if he wanted to, but that's not what he's going to do right now. He's going to wait and see what sort of buy points show up in the coming days. So really, that's the situation with those stocks and the ones that he had there. Now, LinkedIn is more problematic, and he's just blown out of this thing, but it's coming down, and it probably simply, if it's going to go higher, it needs to build a base in here. So we'll see how that happens. But for now, he's just going to back away and take some profits in the SLV, the GLD, the MA, not the RACs and not the LinkedIn. But overall, he hung in there okay, but didn't really make that much money or as much as he might have had things continued, and he would have been able to pyramid. And some people email us and say, oh, can you do a portfolio simulator that shows how you make 300%. Well, the way the portfolio simulator dude does it, if you get a good market, you can make triple digits that way. You don't have to be trading like a maniac, 200, 300% positions like I do when I go up 100% in say a month. But that's just not possible. And for us to sit here and have to write emails all day telling you every little trade this way and that way does not strike me as a very productive thing. So, and I also don't believe that most people are flexible or even have the psychology to implement a strategy where you're very active and you're very aggressive and you don't sit around waiting for yourself to get clobbered. So, that's our view. So I'm looking for the market to come in. So I'm going to sit back. We're short Amazon here. You can see, let's look at the weekly here. Amazon's in a head and shoulders. It's living underneath the 10-week line. It's really easy here to short this thing. I guess you could use this as your stop, 183.42. I was picking up yesterday, I think, on 182.71 on the 50-day moving average on the daily. Yeah, see, the 50-day moving average is 182.68 today because stock's moving down. Notice how it finds support along these lows. I would look forward to eventually break those lows. So, I'm shorted coming into the 50-day around in here. I don't really care if I short and cover here and then short again and maybe cover again and then short again. My objective is not to catch this little blip right here. My objective is to catch a wholesale breakdown through here to the neckline, which I think would initially take you down into this low. Possibly you might undercut this low first and then try and flip back up. But that, to me, that looks like it's going to die. And so it's basically just a matter, if the market rolls over, then I think you'll see Amazon roll over, and it may go sideways in here, but it's almost starting to look like a reverse cup and handle type thing. I know we got an email from somebody telling us that he's invented a new pattern, the reverse cup and handle, and we can use it on our website and blah, blah, blah. There was an article 6 or 7 years ago after I wrote with Bill O'Neill the book, How to Make Money Selling Stocks Short. There was an article in Technical Analysis of Stocks and Commodities magazine that talked about reverse cups and handles. And to me, I don't need to call it a reverse cup and handle. Again, it's just all this need for labeling. You can see here's your cup and here's your handle if you're turning this upside down. But all it is a head and shoulders. You got the left shoulder is below the right shoulder. And also, I think it's an interesting pattern because Amazon started out as a little compact head and shoulders. Here's the left shoulder, the head, and the right shoulder. It breaks down. And I've noticed other patterns. You can go back and look at the way Rim topped a few years ago, 3 years or so ago. It made a little compact head and shoulders, kind of what I call a pinhead and shoulders, because you have this little thin head. It's like a pinhead. And then that also became the head, in turn, became the head of a larger head and shoulders. That's what we're seeing here in Amazon. I think it's probably the weakest pattern in the market, so this is the one I'm going to go after. And it'll bounce around in here. They bounce it off the 176, 177 level all the time. That's been your support. I'm looking for that to break in here if the market breaks. So it's just a matter of taking a position here, whether it's 10%, 20%, 50%, whatever, and then hanging out. Because I doubt very much whether this thing is going to get back up through the 10-week moving average. I could be wrong, so, but I think that's what it looks like to me. So, and today even they try to rally it higher on the opening. It's really not able to go anywhere. So it kind of looks It's sloppy to me at best, but it could noodle around. But I think you take a position and wait. The other thing is that you might catch it on. Okay, let's throw the neckline in here. Here's your neckline right here. So you can see here, I think you might see it break down in here and then bounce. So there's plenty of time for this. You don't even need necessarily to take a position now. You could wait for it to break support here, but I think it's going to do that. What I would do, and one approach I would take here myself, whoops, let's get rid of that. And here's a trend line. You can see this along the lows. If it starts to break that trend line, that's probably not a good sign for the stock. So you can see it today rally down. Let's see, broke down about 1.7, just under 177 now, bouncing up. You got to remember though that $1.79 is 1%, so that's not really too much of a move. Gil, what is portfolio do you think? Is just scared out or looking for better positions? Well, look at what happened in the SLV yesterday. I just showed you what we're seeing in the market. So, and portfolio simulator dude is the only guy whose email questions on the market that would constitute individual and personalized investment advice. He's the only guy we answer. So, I showed him this chart yesterday. He didn't really care for it. He's got some positions he's up on okay, and others that are kind of lukewarm and sitting there. Take some profits and rethink. Nothing wrong with that. There's nothing wrong with that. And I know a lot of you want to sit with your positions forever, but I can remember when we worked at O'Neill, in this kind of environment, the market would get better and better and better, and we'd be getting in heavier and heavier, and then all of a sudden, crack, the thing would break down. And there were a couple of rallies during the 2000-2002 bear market that did exactly that. And a number of the guys internally, we got whacked because we got too aggressive at the wrong time. And that was basically the problem. So, you want to take profits. The rule of stock up 20% in more than 3 weeks, you take some profits, let it base again. And I talked about how I had bailed out. And some people email us, are you still in INVN? I don't know. Dr. K, are you still in INVN?
No.
No, he's not. So I was, let's get rid of this. Let's see. Yeah, I was out of here, and I told you guys. But to me, you can just kind of get a sense of how extended it is. You don't have to sit there and think you're going to sit with it forever. And I told you guys a couple of weeks ago, I think, that this reminded me of MRV Communications in 1994, which I played, and I remember buying around $8, $7, $8, and it ran up a lot like this very quickly up into the, I think it was a 16, 17 area. So it was roughly a double in record time. In 1994, that was a huge move. The market wasn't as nutty as it is now sometimes, but, well, yeah, it was. Sometimes it was. But in any case, I just remembered that. I remember it was looking really good in here, and I kept wanting to buy it and buy it and buy it and add to my position. And I would just keep getting dinged and dinged and dinged, and then 12 weeks later, it forms a cup with a handle, a very shallow cup with handle, and then breaks out. And I remember just having been dinged to death on the thing here, that I never bought it back. And of course, that's where the real price move started, and the stock I think went up into the 60s back then. So again, there's no reason to sit around. You can just take your profits and wait for the next buy point. I think my view is that the pocket pivot, and Dr. K, don't get a big head on this one, is a brilliant discovery, because what it does, it solves so many problems for you. And we did a presentation on pocket pivots earlier this week for the Online Traders Expo number 10, numero 10 for those of you who are bilingual. And we discussed pocket pivots. There's a special issue of Technical Analysis of Stocks and Commodities magazine that features an article, has one article by us on the pocket pivot. So there's plenty of stuff to just continually bombard yourself with if you're trying to learn and gain a better understanding of pocket pivot buy points. And I think what is brilliant about them, how's your head doing, Dr. K? You have the ice pack on it?
You're the only one who actually reminds me of that, by the way. Leave me alone if you're not projecting.
I could be. But maybe you're projecting that I'm projecting, that you're projecting. Anyways.
A double entendre.
I don't know.
Not really.
If your brain likes silly putty, let's all play with it. I'll play with your mind here. Oh, there goes the market. Dow's up 22. But in any case, the pocket pivot, getting back to my original point, the pocket pivot gives you a very potent tool, reference point, weapon, whatever you want to call it, depending on how militaristic you are oriented or not. It gives you a great weapon to re-enter stocks. They have huge runs, you take some profits, and then you let them set up again. Because you notice almost, in fact, I'm going to say just from the examples I've seen, almost all big leaders, they'll have run-ups and then they'll correct, and the first place to start getting back in is always a pocket pivot. And we talk about those in our presentations, and we'll be in Vegas again in May. The only traders expos and money shows we'll do are Vegas, mainly because it's a much funner place than New York in January. Well, actually, this year, New York in January would have been pretty warm. But in any case, we'll be continuing to do presentations on pocket pivots and advancing, the database of examples that we have. And I think, we have a lot from January and February. And so some of these, the initial ones, like the InVision pocket pivot, was one of the areas where you could have made pretty decent money real quick. And so once you get into this phase of the rally, now you're just chopping and slopping. And if you try to stay active during this period, it's a good way to just chop yourself away. So our view is, if we got in pretty good on the metals, and they ran up, and we're starting to see, some action. Like, I don't like this. There we go. I don't like this. I know it undercuts this low, and you get a bounce off the 50A. It's trying to come up, but that's just trouble. That just looks like trouble to me, and it's going to take some time to heal. That's a broken pattern. The uptrend is broken. Maybe it needs to go sideways. I still tend to think that the long-term move in precious metals is to the upside. But the other thing to keep in mind is that ETFs are pieces of paper. They're not the actual metals. So if there is another financial crisis, you have to ask questions like, do you have counterparty risk, or who's backing these ETFs and who makes good on them? So that's a possibility too. And it sort of struck me that yesterday was a little bit of that, because you notice the precious metals got whacked, or as I like to put it, got sacrificed at the sacred QE altar yesterday, when Bernanke really didn't confirm that they're going to come through with more QE. So that's kind of really where you're at. So anyways. People are telling us this is an uptrend. Well, that's good. So if you think it's an uptrend, stay in your positions and do it for 2 more weeks, okay? I mean, with the break in SLV and GLD, as somebody observes, something doesn't quite seem right here. It doesn't. So that's kind of the issue here. Can you quickly explain breadth? And breadth is simply the number of stocks advancing versus the number of stocks declining while the market's rallying. So if breadth is positive, you have more stocks advancing and fewer stocks declining. Okay, so during a rally, you want to see that improve, because you want to see most stocks advancing. So when you see the NASDAQ advanced decline line moving, and I don't need to see it necessarily making a new high or confirming the position where the NASDAQ is, I would just want to see it correlating to the movement. So in other words, if you have a strong rally, what I want to see is I want to see a I want to see the advanced decline line moving with it. And if it's a strong one, you'll have a sharp move in the advanced decline line, like you have here. I like that blue color that comes on. What is it? Is that a Windows 7 quirk? But you can see when the market came out the lows, this is all confirmed. Now you're backing off. So in our view, why sit around? You can just take your profits and back off,
Yeah,
and
another warning sign that we saw was the IWM. If you look at the Russell 2000, that started to diverge, and that's a major indice. So when you see divergences among major indices, that's usually it's a warning sign. And so I think we had a question just about that topic. So yeah, I mean, definitely pay attention to divergences.
Yeah, and that's what we do. And those are some of the warning signs that you see before, IBD tells you the market's under in correction or whatever. And so, that's just what we watch. And when you're up and you're making money, we have experienced enough times where you're up and making money, and then kaboom, you get whacked and it's all gone. So when you have it and you start to see some signs, you can take it and then just wait. And like I said, the pocket pivot is a brilliant discovery precisely because it solves that problem. Where do you add back where you come in again? And again, we're more interested in riding big trends to the upside, not necessarily being long-term investors holding stocks forever. I know some people like to do that, but it's just not the way we operate. We ride the trend while it's our friend, and once we think the trend might be either slowing or stalling, we can back away and see if the trend continues again, and then come back in. It's pretty simple. It's not. There's nothing really complicated about it. I can tell you, watching this market trade, it's like I'm much happier maybe to be in cash, and maybe it gives me a little time to work on our book, which is a big project and takes up a great deal of time. SWI seems to be pocketing off the 10-day moving average. I don't really see that. The volume isn't up enough yet, so and it's kind of come back up through the 10-day moving average today. But I don't really see that as a pocket pivot because the volume is not high enough yet. We're going to do some questions. I mean, you kind of know where we stand, so we don't really feel like we have to sit here and show you a bunch of stocks to buy because that's not what we're doing. We have a position short and a couple other secret shorts that we're testing some theories I have about short selling in pods and things like that, but I'm not going to talk about that now because it's basically our new research, which is proprietary. CRM. CRM acts okay. You have a viable gap up. The one thing I don't like about CRM is this gap up occurs after a long run up. Okay, it's not really coming out of a constructive base. You have a little flag here, and I would look at this maybe even as possibly being shortable if it breaks this low. You might even test it out here using a high here if you want to test it. I think that's a possibility because I didn't really care much for their earnings announcement. I thought it was kind of interesting if you look at what they were talking about. And I think there's some stories out there too, is that the big number that everybody got excited about was the fact that supposedly their deferred revenues jumped up hugely, but the company stated quite frankly on the call that the deferred revenues were a result of extending the invoice period. So in other words, if they bill somebody $200 million for the year and they invoice them this quarter for the first half of the year, so $50 million and $50 million, they will recognize $50 million as current revenue and $50 million as deferred revenue. And then what happens is if they decide that, okay, instead of just billing you for half the year for $100 million, we're going to bill you in the first quarter for the whole year. So now you book $50 million as current revenues and $150 million as deferred revenues. So suddenly your deferred revenues have tripled. Voila! See, and you thought just the government was capable of accounting shenanigans. But, we'll see. The stock's holding up. But like I said, we're not sitting here telling you to buy stocks. We're skeptical of this rally here, and so we don't really want to start telling you to be buying stocks. But it's holding up, so all you would do is use the low here as your stop. End of story. Apple. Okay, this is the one, I debate this one with myself, my 16 other personalities daily. And you wonder, is this a climax top? I mean, Apple's been in a move since early 2009 when the market bottomed. And if it is, okay, it held the 10-day moving average. So you had an opportunity to short on the break through the 500 level, like a Livermore type short, grab some points, and then run for cover once the thing hit the 10-day moving average. And we talked about that, I think, in our emails about that particular short sale setup. So you bounce off the 10-day moving average. Well, the one thing you know for sure, if you're holding Apple and you want to hold it and you think it has longer-term potential, okay, it's quite possible because the stock has held the 10-day moving average. This is a close below the 10-day, but you notice it doesn't go below that low, so it never has violated the 10-day moving average since this point here when it started to move out of this base. So it has been following it for at least 7 weeks, and so you could use the 10-day moving average as a guide for a stop. So that really makes it convenient for you, I think, if you want to try and hold the stock. But Apple, if it's going to go higher, could just set up here and form a base, and it seems to me that that's quite possible. The other thing here is that I do know something about climax tops, and a lot of times a climax top can occur, and the stock can turn around and go up as much as 10% past the peak of that climax top day. You see examples of that happening. So I kind of watch it. You got a little stalling here, but if you really want to try and hold a long-term position, right now the 7-week rule is in effect. Dr. K, am I correct on that, or am I just talking out my left ear?
I think the 7-week rule is in effect because it certainly has been. I mean, you actually, if you look at the Bible Gap Up Day, that's really where you start the count. So, we're at 1, 2, 3, 4, 5. We're in the 5th week. 5 weeks of so far. Yeah.
So that's what you do. So here's somebody asking, why are you using behavior in the indices to make sell decisions in a name like MA? Well, Portfolio Simulator Dude has a nice profit in it. And he doesn't have a nice profit in LinkedIn. And he doesn't have a nice profit in RATS. And he has a nice profit in SLV and GLD. So looking at those positions, the decision is made to take some profits to offset some of the losses. There's nothing wrong with that. And MA, if you want to hold it, go ahead. But he bought it here, so it's a little bit, up high for him. So he might watch it come in and maybe come back in later on. But again, it's a decision that has to be made in terms of, well, how much risk do you want to take? If you're up on some positions and some positions aren't working, do you want to just balance everything out by taking profits going to cash? That's what he elected to do. And he's a kind of a nervous guy. He has a real job, and the last thing he wants to be is stuck in a meeting and the market starts to break down. He doesn't feel like he needs to be sticking his neck out, but that's just his opinion. So, you know, he's a composite character. I think it's interesting that people try to make him into something that he's not, and in the process they also want us to do something that is more like what they think we're doing. And they really don't know what we're doing, and you really don't really have a clue, because you can make 100, 200% just doing it nice and slow. Dr. K's done it running 12 or more positions, up to 20 positions, in a nice, steady, trending market. You know, so it's not rocket science, and there is no special way that we do it that automatically guarantees 300% returns. Remember, if you are using any methodology or any technique or whatever that allows for 300% upside in rapid fashion versus supposedly, you know, 20% upside doing it slow, well, you're taking on a hell of a lot more risk, and that's what people don't understand. They think there's some risk-free way to make big money in the market. Well, I got news for you, there isn't, and there's no magic way. I think if you sat through some of the drawdowns that I sit through, you would freak out. So we're going to run some a portfolio simulator dude doing that. You know, oh, hey, guess what? We're down 20% today, but we're not worried. We're going to go long some more. We're going to short some more, especially on the short side. I'll get that way. And so, you know, just going to confuse most of you out there. And I think if you're sophisticated enough to understand that kind of trading, then you're sophisticated enough to do it on your own. If you're not, you got no business doing it. So we're not going to create a situation where people take on more risks than they really should be, just because they think they're following us and not understanding that we can withstand a great deal of risk because we got deep pockets and maybe you don't. Okay, so
But
that's why we don't do that. Yeah.
Who branch off from, you know, they don't follow a portfolio simulator dude, or they follow him to get a sense of his thinking, because certainly emotional mastery is a big part of the battle in being a successful investor. And so we've got, you know, of course we have people who are big, you know, they have big accounts, they're swinging them around, their volatility is whatever they want it to be, and then they're using our site as a guidepost. So, you know, it's good that we have investors of all sizes and types, essentially, that I think benefit from what we're doing.
Somebody's asking, what is your opinion of fire? It's hot, generally. I mean, there's no opinion to have. You know, you have a buyable gap up. We talked about it last time. If you buy it, this is your stop down at this low. So you're ways down. So we even talked about this, that we'd prefer to buy it closer to this low, because you're kind of buying it up high in here. And at best, you're going to have to wait for the 10-day moving average. So there's no opinion to have. It's a big, a buyable gap up move, and we told everyone it was. We talked about it. I think we even sent out a report, did we not, Dr. K?
I'd have to check. I think on fire it gapped up so much, and then it just ran up. I'm not sure we actually put a report because it was so far up at that point.
Yeah, we talked about it on the webinar. So if you've been on the webinars longer than 1 week, then you heard us talk about it last week. So and there's no opinion to have on it. I mean, it's just a technical rule here. Here's a buyable gap up. That's your stop. So ask yourself, if you buy it up here, you're looking at a good 10% move to the downside before you're out. So maybe that's too much risk to take. And we, as we said, we prefer to buy it coming in. Short TLT, why? If we put out, I wouldn't mess with this. I think you're better off trying to short a stock. That's my view. So, and if we thought it was shortable, we'd put out a report, I think. FIO pocket pivot, not really. I don't know. It's kind of low in its pattern. Kind of a doggy little stock. I don't know. I'm not really a fan of FIO right now. It needs time to set up, and I'm not buying it. As we said, we're not looking to buy anything right now. We're hanging out. So if you guys all want to buy it, go for it. But I'm not. What do you think about that, Dr. K? Is that necessarily something to buy?
Well, it's an interesting story, but I don't like that gap down on the earnings, the last earnings report. And then it did try to make up for it on the 17th of February and then today again. But that's a little bit of a tug of war going on, and I prefer to wait for the stock to calm down and issue a subsequent pocket pivot before I touch the stock.
Yeah. Do other tops or rallies in silver and gold coincide with Fed speeches? We don't really care what the Fed speech is. That's really not the issue. It's the action and how the market reacts to it. You know, I don't necessarily think that the Fed speech was either benign or non-benign. He just kind of said that they feel they have enough stimulus and that their accommodative policies are consistent with what they're trying to do in the economy. I thought that was a pretty benign statement. He didn't say we are not going to have any QE, and in fact, we're sucking liquidity out of the system. And the way silver moved, you think that's what he would have said, but he did not say that. So I think really it kind of gives an excuse, an alibi for the selling, which then the next day everybody thinks, oh, everything's fine, nothing to worry about, look, the market's up, and that's how they suck you in. So we're out. We're being careful here. We're short Amazon, and we're just hanging on that basis. So INVN filed a shelf offering of up to 110 million shares. What is a shelf offering?
Yeah,
it's just
right.
where
that caused a gap down on the 27th.
Right. They also gave kind of lousy guidance. So, I think the key for InVision is that they need to get another customer. Nintendo's almost, 73% of their revenues. I was talking to a pretty smart analyst, and he thinks that's where they're headed. Samsung is already a customer, and that probably will broaden out. But I think that's what you need to see. And so I can see the stock basing while there are some developments. And when something starts to happen, you'll see the stock come out of the base. And I think that's really kind of the key here.
The story is still good on the stock, and yeah, I mean when you have a shelf offering announcement, the stock usually will move lower. Sometimes it'll gap down on big volume, but that's not it's not a flaw in the pattern. It's just that's typically what will happen. So I mean I'm watching this stock very closely because it might gain traction at its 50-day, and sometimes I'll take a position because it's doing the right thing right around support, and I still like the story behind the stock.
Right.
And the big risk is that it's 72% of its business is with one vendor, so that obviously creates a little bit more risk in the pattern. But the story is compelling.
Yeah, I mean, that's about, I don't know, how deep is that base right now? I think it's something like
about 21% off its peak
right now. So yeah, so really you're looking at it pulling back. But a lot of times that's first pullback. And it may need to just build a base here, but Dr. K is right. You can watch and see how this develops. I don't necessarily think that it's topped. It probably needs to build a base, and it would make sense. So it's possible if you like to try and accumulate shares in something you think has longer-term potential, that would be a good place to buy it. And of course, since it's violated the 10-day, you're using the 50-day as your selling guide if you're taking a position. So that's something to consider. Has course formed and broken out of a high tide flag? It looks like it's trying to, yeah. So is that a pocket pivot? It probably is going to turn out to be, but we'll see how that goes. I mean, we've seen some of these happen, and they're too soon. I think we saw F5 try to do that, where it came out here and it just kind of stalls out. But that's what it's trying to do. So that one's acting okay. If you own this, I think you can use I think we're just getting there, aren't we? 7 weeks, just about. Let's see, 1, 2, 3. Just about. You could use a 10-day as your stop on the stock. We don't own it, so.
Yeah, or you could alternatively use the Bible gap up as your reset point, so you can start counting the weeks from here on. Today it will have enough volume for pocket pivot, but it is a bit of an extended pocket pivot, so it's not something.
Yeah, so we would be wary there. We're not necessarily going to be buying that. I don't think. Somebody says Dr. K, 100% cash. Well,
Sorry, what?
Somebody's saying is Dr. K in 100% cash. Are you in 100%? He's got some gold bullion.
No, I'm 90% long right now in individual stocks, but I bailed out of silver. I bailed out of all my precious metals yesterday with that kind of market action after we sent out a warning report, and it's just I was hoping that closer to close that silver would regain its 200-day moving average, and I held on pretty long into the right before the close. I just finally got out of the position, but
right.
My other names look fine, so there's no point in bailing out of those. On the other hand, there is nothing wrong with going to cash and rethinking the whole thing, because you can just get back in if the market firms up here, and it might very well do, because European markets were all up today, and Euro QE is alive and well, so it's very possible this uptrend will just continue right along.
Yeah, and I'd ask you, would you rather have sold INV in here or still owning it? In my book, I'd rather have sold it up there. So, would you rather have sold SLV right here when it filled the gap and couldn't hold it, or would you rather still be holding it? I'd rather have sold it there and wait and see. So that's my perspective on it. Different stocks for different folks. It depends what you have, what you own. Depends where you're concentrated, and it depends on what is the market doing. So, and I think it could be a problem, but that doesn't mean we can't come back into some stocks at some point. So, anyways, what will it take for the MDM to go to cash? Probably need some more distribution news. That's probably what we're looking at. What do you think about that? Is that right? Yeah.
Yeah, I mean, and also leading stocks need to start showing some erosion. Right now, we're still, all systems are still go, despite what Bernanke said, or rather, not what he said, but how the markets reacted to what he said. So we have 2 distribution days in the count right now, and leading stocks are still looking okay.
Yeah, they're hanging in there, and some of them look like they need to base. So we're kind of watching, and we've got a laundry list that we might want to come back into, and we can turn pretty fast and come in. We're not, but we see danger here, and we see the potential for a pullback. And given what happened in the precious metals and where in the specific account that we run together, where we were heavily concentrated, it's better just to back away. And of course, we're not going to just turn around and sell all that and turn around and start buying stocks. That's kind of stupid. So what we'll do is just kind of lay back and let things develop. So patience is always a virtue of selfish investing. Do you see Apple as an indicator to the broader market? Well, they say that Apple's been responsible for 17% of the market's rally, and that's probably true. So it is a big stock. I kind of looked at it. I owned it, and I did pretty well. I bought it at 444, the sign of the Gilmo, and ended up selling it out at like 421, and coming back in here, catching a few points on this, and then selling out in here. So I'm playing it, and I've done okay with it, and I know a number of other people who have as well. So it's acting well, and it is one of the stocks dragging the market up, and it is one of the reasons strong performance in this stock versus say the broader leadership is what's really pushing the market. So that's responsible for the Nasdaq making new highs as breadth sort of goes sideways. So. I don't know. I remember once seeing signs in 1997, and the market was topping. I went to cash, and a couple of the other brokers in the office I told about that, guys who would come in my office and bug me, and I guess they ran around through the whole office. I remember that afternoon going down the elevator and being chided because the market was up that day, and being chided by all the brokers. And then the next day the market blew apart 500 points on the Dow. So sometimes when we see what I want to see, I think it's time to take profits. And like I said, I'm out here. If you still own it, who do you want to be? In the position of buying it back after bagging this profit, or still sitting with it? Of course, I have a much bigger position, and Dr. K's position is probably more in the lines of being a 10, 20, 30% position. Probably, I'm guessing. You don't have to tell me.
Typically, I mean, as I've illustrated in the book and also on the website, I typically will be. I like to have 12 to 18 names in a good market environment. That means if I'm fully margined, I'm probably going to have something around in that neighborhood. And for instance, like right now, I'm 90% long, and so that people might think, well, wait, I thought you had precious metals. Yeah, I did. I was about 165% long going into yesterday's trade.
Yeah, you don't.
So I have no fear going 200% long the market fairly quickly, especially if all the ducks are in a row. Like in August, or rather September of 2006, it took me 3 days to be 200% invested and stay 200% invested for that open window of opportunity.
Yeah,
and that's how I was able to run up my account about 115% in 3 months.
Lulu going up, it's acting well. I think somebody came out and there's a buy recommendation on it and some article about it going a lot higher. A lot of people try to short this stock, and I think that's what sets it going higher. A lot of people try to short CMG, and that's like the vice coming on the shorts in CMG because it just continues going higher. Because obviously these are wildly overvalued stocks, and so you don't want to be owning any of them, right? And that's what happens. There are a lot of questions like, rather than sell out positions like MA. It's only a 10% position. Why not just tighten it? Well, why not? You can do whatever you want. That's just what one guy did. Like I said, why are you guys trying to make so much out of it? Like it implies some sort of thought out system, or some deep thinking and multiple reasons from 50 different indicators. This is BS. Wake up. No soup for you. It's like he's just a guy who trades, and he has some profits, and the market's scaring him, and he got whacked in his metals yesterday. So he said, I'm just going to go to cash, and I'll rethink it. Why not? I think some people are better off doing that than trying to hang in there and get an ulcer, Does the move in IWM put the MGM close to a cash signal? The divergence in the... No, not really. I mean, does it, Dr. K? Does it put in a cash signal?
It's a negative factor. It's a red flag. I mean, it certainly weighs in on how the model assesses the market, but it's not enough of a factor to push it into a sell signal. But it is one of the factors, certainly.
Sure. But it's not a sell signal yet. It's still a buy signal.
It's more on a buy signal than a sell. It's let's say if the neutral point, it's more toward the buy signal. It's fairly solidly in the buy signal zone. The market would have to do some things over the next few days to push it into the sell signal.
Yeah. Let's see. Price line. People are asking about. What is there to tell you? It gapped up. So far, it's holding the low of the gap up day. That's about it. I just wonder what are you expecting us to tell you? I'm not sure. I'm a little confused on this. So you want to know what we think of price line? What is there to think? There's a gap up. It's holding the low. So it is, a gap up from a long base. Could it go higher? It reminds me a little bit of iSurge. Maybe it could. iSurge came out of a long base and continued higher. I don't think it gapped up though. Turned around after selling off and went higher. So, doesn't look. Price line looks fine right now on the gap up. So we're looking around some of these, but again, this occurs after it's a gap up after an extended run, and those tend to bother me a little bit because I think it's almost like an exhaustion gap. I tend to like to see things coming out like I thought Apple's gap up was maybe a little better because you have this base and you're going sideways here and then you gap up here, and in the scale of it all, it's not less of an exhaustion gap up because you can see in these rallies, zoop and exhaustion gap up, and these rallies, zoop, exhaustion gap. It continues higher, but then it rolls over and dies. So that's kind of how I see this price line. A little bit of that going on, I don't know, and then serum. So, but all you have to do, you don't really have to think about it too much. You just use the low of the gap up day as your stop. That's it. So we already talked about Theo. Shouldn't our stocks tell us when to sell rather than the indices? Yeah, you can operate on that basis. So, and Dr. K is, but heavy in silver and gold making big money. We blew those out, so that takes us mostly to cash. And Dr. K is sitting over there with his positions that are acting okay. So yeah, you could sell the Apple and buy call. You could do, yeah, I suppose you could do that. And that's pretty much. That's the story, Morning Glory. I mean, really, it just kind of, the metals look funky here, so the market's breadth is kind of petering out here. You see some stocks gapping up and acting okay. You see some stocks floundering around a bit. Let's see here. Jazz was an interesting one. Here it was breaking out, it's getting whacked. So, you see these things doing this one day, and the next day this is happening. So. Let's see what else. MasterCard coming in now. So, volume picked up yesterday and you rolled off the peak outside reversal day coming in. So probably next stop is a 10-day moving average. Caterpillar is another one I'm keeping an eye on here. Oh, the one thing I noticed though is you have these these big patterns, and they almost look like pods to me. So Caterpillar almost looks like a pod, this big pod type thing. So I'm a little wary of buying these things up here. So it's holding up right now, but we'll see how things pan out over the next few days. But I'm just kind of watching this, and this kind of bothers me. And this is pretty extended, and you notice you're wedging here. So you know, not all leading stocks are necessarily acting well. There are some, and of course some you can sit with through a bear market. Remember, I owned Lockheed off the lows of September 2001, and I owned it until May of 2002, and the market topped in January of 2002. So yeah, there can be stocks that continue well. So if you want to go on the basis of what your stocks are doing, that certainly you can do that. Dr. K is doing that, so but he's a little slower. If you're really aggressive, you can take profits. I'm more aggressive, so. But it certainly is not a template that is for everyone. So remember, you just watch your stocks if that's what you want to do. And you know, if you start see things getting whacked that you own, you need to back away from those. So the question really becomes, what is this telling us, if anything, about the state of QE? And does the market have the potential to continue growing? Or does the economy have the potential to continue growing on its own? Are things really that good? And that's a tough one to call, frankly. And so you know, we're doing what we need to do in terms of where individual stocks are. Portfolio Simulator did what he did. So, and I plan to show how, or we plan to show how, if you do something like what he did, and then you need to come back in, how do you approach that? So, you know, we're just using him as a teaching tool. So everybody wants to turn it into something else, and I think that's funny. So I'll say it for the 5,000th time. Portfolio Simulator is just a composite. You know, a lot of people email us with, oh man, I sold this out, and I got shaken out of that, and I did that, and what do I do now? And you know, I bought AGQ when silver was at 49, and you guys were telling us to sell it, and I sat there and I didn't sell it, and now it's at you know, cut in half. What do I do next? We're just trying to show, you know, what do you do and how do you handle these things. So trying to give some insight into that, and we'll work together on that. So I mean, as somebody emailed us, you know, I want to know who's behind it. Is it you or Dr. K? And I thought that was a kind of a comical question, because the essence of the question is that, well, the person wants to know if it's me because I'll hold things for a nanosecond. I think it's a little too short. That's what I consider short-term investing. Microseconds would be long-term investing, and somewhere in between there would be intermediate-term investing. But, I mean, come on, use a little common sense. Have you seen the Portfolio Simulator hold positions for a nanosecond? So, you know, why, if I hold positions, if you postulate, and I can tell you that you're postulating because you really don't know what the hell you're talking about, that I hold stocks for a nanosecond and Dr. K holds them forever, and therefore that's going to be reflected in Portfolio Simulator You're not watching what Portfolio Simulator is doing, because if it was, you would see him trading in out of stocks all day long, and he doesn't. So please, when you're going to ask us a question, one requirement is that you use a little common sense. Otherwise, no soup for you. And that's the end of that. So that's all we got today. If you guys got any more questions, you can email us. I don't see anything coming through on the chat feature. So that's all I got. You got anything to add, Dr. K?
No, I think we're pretty clean here.
All right, very good. So everybody, good luck today, and we'll just see how things pan out. But again, yeah, if you want to go buy your stocks, go buy your stocks and watch your stocks. If you got some big gains in something and you want to try and play it out, go for it. You know, you might be right, you know, but we're okay with what we're doing, so I don't have a problem with it. Feeling very comfortable right now, just kind of let things watch. And I think the key is probably not to feel like if you go to catch, you need to come right back in if the market's up one day. You just kind of wait, and like I said, patience is always a virtue of selfish investing. Anyways, thanks for listening, everybody. We'll catch you next time. Take care.
So long, everybody.